Assalamualaikum, this is Fahad Ali again with the video, and this time the video is all about the accounting for bad debts. Accounting for bad debts is a topic in accounting 7707. This is very important topic, and many of the students don't understand how to solve the topic. So if you haven't subscribed to the channel, do subscribe it. If you haven't liked my Facebook page, do like it because I am sharing some information over there. If you're not connected with me on Instagram, so you can go over there and type Fahad Ali 175. Okay, so let's start with the video. Okay, so coming back to the topic in this video, that we will be starting with the concept of bad debts. There are two things which are asked by the examiner: bad debts and allowance for doubtful debts. Okay, the third thing is the bad debts recovered. What are these concepts? How will we solve these concepts? I'll just tell you in today's video. So don't skip the video. Just watch this video from the start till the end, and you will get to know how to solve a question in the examination. Okay, first of all, starting with the concept of bad debts. What are bad debts? Bad debts means that there is 100% chance that a customer will not be able to pay us. Okay, a customer will not be able to pay us, and why it happens? Will not be able to pay us. I'll tell you why it happens. Will not be able to pay us. Okay, I'll tell you why it happens. The reason is that because the customer might have left the country, the customer might have become bankrupt. These are the two main reasons where we observe this thing, that the customer will not be able to pay us and we have to record the bad debts. Bad debts is an expense for the business. How bad debts happen? You would have observed this thing in our earlier studies. We have recorded some of the credit sales. So credit sales means that you are selling something of credit. So there is always a risk that the customer might not pay us in the future. So when there is a risk, we have to record that risk in the accounting world, because it's a type of transaction. This is an expense. I'll just write it down over here. Okay, so now coming back to this concept of allowance for doubtful debts. So there is a contrast between bad debts and allowance for doubtful debts. Allowance for doubtful debts, and the earlier name was provision for doubtful debts. So whenever the word provision comes, always remember that it will always increase on the credit side. It will always increase on the credit side. Which side? Credit side. Okay, do remember this thing. When it increases on the credit side, it will decrease on the debit side. Expenses always increase on the debit side, so they will decrease on the credit side. And the last thing which is very important in today's lecture is bad debts recovered. Bad debts recovered used to be in AS level, but the examiner has made some changes and now it is being tested in the O-levels examination. Okay, so what is the concept of bad debts recovered? The bad debts recovered concept is saying that when a customer has been recorded a bad debts, that means a customer has been recorded written off. The customer will not be able to pay us. According to accounting, you are not expecting the payment from the customer, but after 2 years, after 3 years, the customer returns back and the customer is paying you back. So you cannot say this thing that no, I don't want to accept the payment from you and blah blah blah. You cannot say this thing. You have to accept the payment, and when you have to accept the payment, what accounting treatment will you do in that case? So you have to see that in this video. So for the accounting general entries which are required in this, what we do, we record the general journal. Okay, we record the general journal entries. So let's see the general journal entries. What are the entries for bad debts, for recording a bad debt? Let's suppose it is saying Ahmed, who owed $5,000, was declared bankrupt. This was the statement, was declared bankrupt. This will be the statement which will be there in the examination. Okay, excuse me for my writing because again I'm trying my level best to improve myself. Okay, Ahmed, who owed $5,000, was declared bankrupt. There are two words which will be written down for the bad debts: write off or written off. And the question will be saying write off the bad debts or the bad debts needs to be written off. So you need to pass the bad debt. This is the greatest sign that this is a bad debt. Okay, so how will you record that? You will write bad debts. You will put the values over here, debit side, DR, debit tracker, and then it will be trade receivables credit. So why trade receivables credit? I'll give you the logic for that. I'll give you the reason for that. Always remember, trade receivables are credited just because they are decreased. Whenever an asset is decreased, so it is being credited, and trade receivables is a current asset. Okay, so remember this thing. And this is expense. Expenses always increase on the debit side. Sir, what if the name of the customer is given? When the name of the customer is given, so we do not write trade receivable, we write the name of the customer. So let's write the name of the customer. Remove this bad debts debit and Ahmed credit, because the name of the customer is Ahmed over here. So I'll just write Ahmed over here. I hope you are able to understand that what I have written down over here. Okay. Now moving forward, sir, we need to have the T accounts. So T accounts, let's make T accounts over here. The question might ask you to make the T account. So maybe the T accounts would look like this. Bad debts T account. Bad debts is sometimes also referred to as irrecoverable debt. Okay. So I just put the random numbers, the years which are not mentioned, and I'm putting an assumption, a date which is based on assumption May 31st, and Ahmed was declared bankrupt as it is saying bad debts debit. The entry was saying bad debts debit. So I'm doing bad debts debit in the name of Ahmed, $5,000. On the credit side, what I do on the last date of the year, what I do, I write income statement because there is no balance BD or CD in the bad debts T account. I hope you're getting the knowledge which I'm sharing it over here. Double underlining, the account is closed. Okay, I hope you got it. Now moving forward, we have to make another T account which is of Ahmed. So let's see how Ahmed's T account will be made over here. Okay, this is Ahmed's T account, and let's see why it is and how it is made. The same year, and you can see bad debts has been debited. You will do the credit side of this statement. What you write bad debts. The amount is 5,000. This time you will write on the debit side the balance CD, but the question might not ask you to write the balance CD. So again, what you have to do, you have to write Ahmed on the credit side, bad debts 5,000. I hope I'm able to give the concept of bad debts over here. Okay, now coming back to the concept of allowance for doubtful debts. Allowance for doubtful bad debts means that there are chances, percentage chances that the customer might turn itself, the customer might become a bad debt, which means that the customer might not pay us in future. Sir, how will you get to know that the customer might not be able to pay us in the future? See, when a payment was due from the customer on 15th of March, let's suppose. So when I made a call to the customer is saying I need 10 days more. So now it is 5th of March, and when I made a call to customer on 25th of March, again the customer is saying I can pay you on 1st of April. So when the dates keep on delaying, so what happens, the customer is not able to pay us. There are high chances that this debt, this amount which is owed, which is due, would become a bad debt in the future time period. So remember this thing, we have to record it as soon as possible. Sir, why do we record it? Because we have a concept of prudence. There are MCQs of accounting which ask you which concept is applied for provision for doubtful debts or allowance for doubtful debts. So the answer is prudence concept, which says anticipated or expected losses should be recorded as soon as possible, but do not record anticipated or expected gains, that is the revenue which is to be earned in the future time period, unless and until it has been earned. Okay, so you record the expected losses which are to be incurred in the future time period. Why? So that your balance sheet or income statement should be as realistic as possible. So let's make the provision for doubtful debts general entries. General entries are very important. General and the journal entries are when it is increased. So I'll just tell you how to record it. Increase of provision for doubtful debt. When the doubt is increasing for the trade receiver, that's bad for the business. So what will happen? We'll record it like this: income statement debit and which is debit record, and allowance for doubtful debts credit. Okay, allowance for doubtful debts credit. And then we have a decrease of allowance for doubtful debts. So when there is a decrease, the entry will become reverse. Allowance for doubtful debts debit and income statement credit. Doubtful debts debit and income statement will be credit. So I'll just record it over here: income statement credit. Whenever the income statement is being credited, it means the income statement is increasing. Remember this thing. So I'll just make the T accounts over here so that you should get the concept. First I'll make the T account of increase, then I'll make the T account of decrease. This T account will be of increase in provision for doubtful debts. So let's see how do we do this. Allowance for doubtful debts, which is over here. So dollar signs, the presentation of the T account always matters to the examiner. Two things are very easy, two things are very fixed. That is, balance BD will always come on the debit side, so we'll write it down on the debit side, and balance CD will always come on the debit side. Okay, balance CD on the credit side, balance BD on the credit side, and balance CD on the debit side. Remember this thing. So from where do we get the balance CD? You will have the trade receivables balance given in the question. Okay, you will have the trade receivables balance given in the question. You will multiply that balance with the percentage of allowance for doubtful debts, percentage of allowance for doubtful debts, which will be given in the question. So when it is given in the question, you will multiply that with the trade receivables balance, which is given in the question. You will get an answer. That answer will be the balance CD of the question. That balance CD which you will calculate minus the balance BD which is given. Sometimes the students are very confused. They say that's said there is no balance BD. So if there is no balance BD, just mark it 0. Balance CD on the debit side minus balance BD on the credit side. So if I get a value on the credit side, so it is an increase. So income statement becomes your balancing figure. What it becomes? It becomes your balancing figure. That means you deduct balance CD from balance BD, your income statement becomes your balancing figure. So this shows that there is an increase in provision for doubtful debts. Whenever there is an income statement on the credit side, it means it is an increase in allowance for doubtful debts. Okay. Now the next thing. Now I need to show you the decrease in allowance for doubtful debts. Okay, allowance for doubtful debts, and that will be the decrease. So let me show you how it will be done. Again, keeping those things fixed. January 1st, balance BD, it is fixed. It will always come on the credit side of the T account. Okay. Then balance CD, it will always come on the debit side of the T account. These things are fixed. These do not change in the question. Balance CD, how did you get it? You will multiply trade receivables balance into percentage of allowance which will be given in the question by the company, whichever company is there. You deduct balance CD from balance BD. You observe this thing that the balance, which is the balancing figure income statement, is coming on the debit side. So you will write it down on the debit side. This debit side means that there is a decrease in allowance for doubtful debts. You record it as it is. Okay. So this completes your T account. I hope you have understood that if it is a decrease, it will come on the debit side. The income statement will come on the debit side. If it is an increase, the income statement will come on the credit side. I hope you are getting this thing over here. Now coming to the concept of bad debts recovered. Let's see that. Yes, bad debts recovered. Bad debts recovered. Your customer has become bad debt in 2015, and after 2018 he has returned to you. So what you will do, you will make two transactions over here. The journal entries I am making over here. You will record trade receivables debit. So why we are making trade receivables debit? Because we need to make the debtor alive. We need to make the customer alive in our books. So when we need to make the customer alive, we need to do the debit side. Okay. So then bad debts recovered credit, because bad debts recovered is an income, it's a revenue. So that's why we are crediting it. Then what we do this thing, cash/bank, whatever the amount is paid to the customer. So we write it down on the debit side, and we write it down trade receivables credit. So these 4 transactions have to be completed in your books. Sometimes the teachers give you the choice. Let me show you that. Maybe some of you might be thinking at this time, or what you need to do, cash/bank, bad debts recovered. But it is always preferable that you record these 4 transactions, because the examiner might allot you 4 marks for this. And when you're doing these transactions, there are high chances that you will not be able to do it correctly, and you might end up making an error. So remember this thing, do or go on a slow approach. So I'll make the T accounts of bad debts recovered. I'll make the T account of trade receivables. Trade receivables. But I think it's not important for me to make the trade receivables account, but I'll explain that. The amount which is to be due, let's suppose 200 was due, so we'll write 200 on the debit side in the first transaction, which was bad debts, with the name of bad debts recovered, 200 on the debit side. Once it is paid, what I write cash/bank 200. So this is the way how the trade receivables T account will be made. I have made it roughly just to give you an idea. But what the examiner can ask you in the examination is the bad debts recovered T account. So let's make the bad debts recovered T account. Bad debts recovered. Okay. So this bad debts recovered T account, it will always be on the credit side. Why? Because it's revenue. Okay. Sorry, it will always be on the debit side because it's revenue. So when bad debts recovered, trade receivables will be on the credit side because you are opening a trade receivables, and on the debit side what you write? You write income statement. Okay. And this is the way the account will be closed out. Again, there is no balance CD or BD in the bad debts recovered account. There is no balance BD or CD in the which T account? In bad debts T account. So you need to remember this thing. Two things which are remaining before we end the video, that is the statement of profit or loss, that is income statement extract. Profit or loss extract. Okay. I need to write it down, extract. If you don't write the word extract, you will end up losing marks in examination. Whatever the date is, I am not writing the date over here. Okay. So there are 3 column format. I'm assuming that there is bad debts. What I'll write bad debts and increase in allowance for doubtful debts. Okay. If there is an increase in the question, increase in allowance for doubtful debts. So I just put the amount over here. I just take down the expense in the last column and you will get it deducted from the gross profit. Okay. But if there is a decrease in allowance for doubtful debts, so I'll write a statement of profit or loss. A statement of profit or loss, short form, extract, and I'll write it down over here as gross profit. I'll start from here. 3 column format. And again I'll write the amount over here as gross profit. Add other income if the allowance for doubtful debts is decreasing. Okay. Allowance for doubtful debts. Okay. So I'll write this thing, allowance for doubtful debts decrease. Okay. I don't know why I'm fumbling in this video. It will be decrease. So decrease is an income for the business. So I'll write it over here. Then again it will go down to the expenses section. Over here, expenses, and then I'll write bad debts as an expense over here, which will come in the second column just to total all the expenses, and in the end it will go in the third column and it will be deducted. I hope you are getting it. Last format is statement of financial position, SOFP, that is an extract. So I'm writing a short form. Do not write the short forms, avoid them. Cost, depreciation, and net book value. Okay. So I'll just write it down over here. Current assets which are important. So I'll directly come to the trade receivables. What I'll do, I'll just write it down over here. The trade receivables balance, TR, which is given in the question, minus bad debts. So whatever the answer comes, that will come in the first column. And from this answer, I'll write less allowance for doubtful debts. Sir, which value should be deducted from here? The balance CD of allowance for doubtful debts. Which value? The balance CD of allowance for doubtful debts should be deducted after you are done with deducting of bad debts. You deduct this. From this value, you will get an answer in the second column, that will be final answer for trade receivables. Then again you will go with the same flow of income of balance sheet which you have done already. So if you haven't subscribed the video, do subscribe to the channel, like the video, share, comment below, and if you have any queries you can just ask me now. Okay, so this was the video for today. Inshallah we'll meet again in the next video. So stay tuned. Goodbye.